Hello, everybody. At this time, we are talking about Treasury. Treasury is a key finance function that is vital to the financial health and success of every business. Treasury involves the management of money and financial risk in a business. Its priority is to ensure the business has the money it needs to manage its day-to-day business obligation, while also helping develop its long-term financial strategy and policies. And then, what does Treasury do in a company? The first, asset liability management. Companies hold a range of instruments on balance sheet, and each has its own characteristics and behaviors. The asset liability management team is concerned with the blend of assets and liabilities, as well as any mismatch between maturity, currencies, and interest rates. And then second, special projects and integrations. Overseeing all parts of the business and being agnostic toward any specific business line makes the Treasury a useful partner for integrating acquisitions or spearheading IT information initiatives. And then third, funds transfer pricing. Treasuries price liabilities for use in everyday asset generating activities, and the funds transfer pricing reflects the cost of liabilities and is charged to a business unit when it wants to originate a new asset. Unlike the cost of debt figure, which can be represented as a standalone or benchmark bond yield, the funds transfer pricing represents a fully loaded loss. It is the overall weighted average cost of all liabilities plus the internally shared cost of the business minus treasury profit. And then fourth, portfolio management. Treasuries are financial asset managers for their company, investing spare cash on the balance sheet to generate a return. This type of investment management is often a creative exercise that involves a search for yield, liquidity, and capital efficiency. And then we move to the difference between treasury and accounting. Distinguishing treasury from accounting involves recognizing their unique roles. Treasury focuses on optimizing cash flows aligned with business goals, while accounting is responsible for crafting precise financial statements to portray the company's financial well-being accurately. To grasp this distinction fully, It's essential to differentiate between cash flows and income or expense dynamics. In accounting, revenue is recorded upon a sale, even if it takes time to materialize as cash. Conversely, Treasury concerns itself with actual cash movements, rendering book revenue and then temporarily irrelevant until it manifests as tangible cash. Similarly, expenses are booked in accounting but remain as cash until disbursed, a perspective crucial in Treasury's cash management. And then, why is the Treasury Department at the heart of business operations? Treasury departments are a foundational part of companies large and small. Their role of safeguarding and optimizing the financial resources of your business is essential for your company's survival. More than that, the Department Treasury supports the long-term strategic development of businesses by allowing them to find the best source of financing, optimize their current resources, leverage their investment, and plan for the long term. In other words, treasurers have to drive your company's success. Alongside the chief financial officer, the chief treasurer weighs in on the various risks associated with business and makes strategic decisions to foster growth. Their decisions directly impact its performance and profits. And then, where do Treasury professionals work? Treasury offers a diverse career in finance with lots of opportunities. You could be working anywhere around the world and for any type of business, from large global organizations, not-for-profit and government departments. And then it starts up in small and medium-sized enterprises. The treasury function will vary depending on the size and nature of each business. And then we move to the relationship between treasury and accounting. Treasury and accounting are similar because they both help professionals manage and decide on financial matters. A treasury team can help a company make decisions that may improve its financial well-being. An organization's treasury team can affect the outcome of financial performance reports and the public's perspective of a brand. It may benefit a treasurer to understand that their activities may affect a company's financial reports. An accounting department prepares financial support for a business. There may be treasurers and accountants who may have qualifications in both fields. A treasurer can choose to get accounting qualifications to expand their skills. Employers may also prefer to hire a professional with both skill sets as opposed to one skill set. I think it is enough. Thanks for watching.